So good morning, everyone. Nice to see you so many attending. Welcome to Get Baltic workshop. My name is Karolis Bagdonas. I'm a senior key account manager at Get Baltic. And today our workshop will be, again, quite short, up to half an hour. And I hope it will be a good time for you to deepen your knowledge. And since March of last year, we started this series of webinars to provide you with the updates on the Baltic-Finnish market integration into EEX and guide you through this transition phase. So again, I would like to welcome you to Get Baltic workshop number 2, product specification. After the presentation, you will be having a chance to provide your questions. Please find the Q&A section, write your questions, and we'll be happy to answer them. So let's start with the workshop, and I would like to invite my colleague, Xavier Denis, EEX Senior Market Operator. Xavier, please, the stage is yours.
Good morning, everyone. I'm Xavier, and we will start right away the presentation of EEX gas products. So you should see my screen now.
Yeah, all good.
So first, we will have a general overview of the product, actually a pretty thorough overview. Then I will show you how the product look on the trading screen, and then we'll have a questions session where I already copied some of the questions that have been forwarded to me. And you will be free to ask other questions if you want. First, on the map, we have at EEX Gas a presence in Europe with the different countries that you can see here. Each hub tradable is a country. It used not to be so. For example, in the past, Germany was split in two, France was also split in two. Now it's quite straightforward, one hub, one country. And on the up right, the soon to be tradable GET Baltic product. On the maturity side, we have a physical spot market, which includes different maturities that we will go more into details later. Same goes for derivatives. So for derivatives, we have a quite wide offer. With physical futures, which are the basic derivatives product. We also have EXI futures, which are cash-settled futures, with maturities from daily to calendar. All these products, spot or derivatives, are tradable via spreads, which are locational swaps of products between two locations. On derivatives, we also offer time spreads. So you can, for example, trade a spread between March and an April contract. That's the type of time spread you can expect. Then finally, we have an LNG offer. We offer LNG products, so which is represented here by the tanker. Our spot products are open 24/7, and our derivatives products are open in business hours, which means for us 8 a.m. to 6 p.m. Paris time, which would be 9 to 7 for you if I'm not mistaken. Let's dive into the spot market now. That's the general schedule of how the spot market is organized. The main maturities are within day, WD, and day ahead, DA. Within day is also called intraday. It allows you to trade gas for the current day. So on the top, you can see the delivery and tradability on the left. So the within day, you can see if you trade it on Monday, you get it delivered on Monday, etc. For the day ahead, you trade it on Monday and you get it delivered on Tuesday, so the next day. To be precise, it's the next business day. So when there's a weekend here, your day ahead is tradable the Friday and delivered the Monday. So for the day ahead, all non-business day are switched, and you can trade these non-business day as special products, which are called Saturday and Sunday, but also weekend that will include Saturday and Sunday together. So the weekend contract is a 48 hours delivery contract. Saturday, Sunday, and weekends are tradable from Thursday, and Saturday and Sunday, is tradable until Saturday. The weekend expiry, of course, is on Friday evening. Yes, I didn't mention it, but you have also products called individual day and bank holidays that are quite special products. We will not dive into them right now, but they correspond to special bank holidays. Regarding GET products, the available location will be Lithuania, Latvia, Estonia, and Finland. The spreads available on spot will be locational spreads between the GET hubs and TTF, THE, PEG, PVB, ETF, and SEG, which are Netherlands, Germany, France, Spain, I missed this one, Denmark, and Austria. Our available product as listed previously within day, they had weekend, Saturday, Sunday, and the special products, bank holiday and individual day. Unit will be megawatt hour per day. So there will be 24 factor between GET products and most of the other hubs, which are quoted in megawatt. Minimum quantity will be 1. Quantity stepping will be also 1. Price tick will be 2.5 cents. Trading hours will be, of course, 24/7, tradable at any time. Transaction fees will be 5 cents per megawatt hour, and clearing fee will be 1 cent per megawatt hour. So transaction fee is the fee that is applied at the trading level, so on EEX side, and the clearing fee is the fee that is applied by ECC, so on post-trading on the clearing side. Now, GET derivatives. Available location are the same, but the spreads are all possible spread. So spread with any other already existing EEX gas hub, but also spread between the GET hubs, which won't be available for spot. The available products will be for simple derivatives, the next 12 months, 11 quarters, 11 seasons, and the next 6 years. Unit is the same, minimum quantity and quantity stepping is the same, and the price tick will be 0.5 cent for on-exchange trades and 0.1 for trade registration, which is OTC deals, basically, registered bilaterally or by brokers. Expiry of a derivatives contract is 2 business days before delivery start, 4 months, and 3 business days before delivery start for the others, which are quarters, season, and years. Delivery start is necessarily the first day of the month, business or not. Trading hours will be 8 to 6, as previously stated, which will be 9 to 7 for you. Trading fees will be 1 cent per megawatt hour, 0.25 cents for the clearing fee, and delivery fee will be 1 cent per megawatt hour. Note that there is no delivery fee for spot. The derivatives products are organized as such. The maturities that you can see here are cascading all the way from years to month. There's a strict correspondence between years, quarters, and month, and also between seasons, quarters, and month. So you can see that 1 year is split in 4 quarters. The Q2 and 3 correspond to the summer season, and Q4 and 1 to the winter season. And each quarter is split in 3 months each time. So for example, the addition of the 3 months here will have the same number of delivery hours than the quarter Q1 here. And if you add the 12 months, you will have the same delivery hour than for the year, to make it simple. Here are some product naming examples, so you can just figure out how you will see the products appearing on your screen. So for example, day ahead, you will have TTF day ahead and the date. For a weekend, it will be basically the same. Instead of DA, you will have a WE here, weekend, and the days corresponding to the weekend. Same goes for Saturday, and THE within day here for the within day. So there's specificity for the within day that you will have on most products, but not on GET. So as GET will be quoted in megawatt hours per day, the within day will be only one product. They will not be one product per hour, and you will get the quantity that you trade. On the rest of the market, you will get a quantity. We will get back to it, but you will get a quantity delivered per hour during the rest of the day. So the most within day products are linked to the trading hour and then a delivery hour, which is here, for example, 16. So hour 16 of the day, 16 up to the rest of the gas day for delivery. Derivatives. You will have, for example, month August 2025, quarter Q4 2025. That's quite straightforward. So now let's get into the specifics of spot trading. So you can represent the trading day, gas day, how it's all organized. First, on the timeline, you can see that your trading on spot happens for a product between 3 a.m. and 3 a.m. of the next day. That's what we call trading day. This trading day is linked to gas day or delivery day, which is from 6 to 6 of the same day. So you are trading here between 3 and 3, and you're delivered here between 6 and 6. So why do we have these 3 hours of buffer? It's what we call lead time. It's minimum time to allow the post-trading operation and to secure the delivery of the trades. So it's between the trading and the clearing. There's a specific case for within day. So as you can see, the trading day for within day is from 2 to 2 a.m. of the next day, because between 2 and 3, your within day equals the day ahead. So to make it simple, when you trade a within day, you have 3 hours lead time. So if you trade here between 2 and 3, you had 3 hours lead time, so 3 plus 3, so you are at 6. So here, when you trade the within day, you're already trading the next delivery day. So that's why the rolling of the within day is at 2. And if you're trading a day ahead at the same time between 2 and 3, it will be day ahead for delivery the next day. So these are the same products. As you can see here, Day ahead is quite straightforward. You're trading a day ahead here between 3 and 3, and you're getting delivered the 24 next hours of the next day. For within day, I took another example. So that's for generic within day products, for example, TTF. If you trade between 15 and 16, you'll be delivered. You have your lead time here. So 16 brings you to 19, sorry. And your within day is delivered from 19 to the end of the gas day at 6 a.m. of the next day. So now the difference between most of the products that you will have tradable on the screen and the GET products, which are quoted in megawatt hours per day, is the following. If you trade 10 megawatts of within day for, let's say, TTF, you will have a delivery of 10 megawatt hour for each delivery hour. So for all the remaining hours of the day, so you will have 11 hours of 10 megawatts each hour delivered. So 110 megawatt hours total. The quantity traded on screen needs to be multiplied by the delivery hours of the within day product. That's why for most products we have one definite within day product per hour. On the other hand, for GET products, it will be way more straightforward. Delivery will be the same. If you trade here, you'll be delivered here, but you will get the quantity that is traded on screen. So if you trade 10 megawatt hours per day of GET of, let's say, Lithuania within day, you will be delivered 10 megawatt hours in total. So if you want to match the 10 megawatt within day delivered quantity, you will have to multiply by 24. So 10 megawatts of within day TTF here traded at that time will equal, here we have 11 delivery hours. Sorry, forget about the 24. We have 11 delivery hours. So you will have to trade 110 megawatt hours per day of within day. Let's see quickly the trading screen now. The Joule front end is an integrated front end that allows you to get quotes from many different venues. So it's represented here. You can have venues for EEX gas, but also from other venues as brokers, all gathered in one screen. The screen will look roughly like that. So this screenshot is from our testing interface, so it will look slightly different, but the organization of the products and of the maturities will be exactly the same that what you will experience in Joule. On the left side, you have the buy side, and on the sell side, on the right side, sorry, you have the sell side. So here I took the example for the product TTF. On each side, you have two columns, the quantity and the price. So price on bid, buy, and price on ask, sell. Here you have the maturities column with all the maturities that were previously presented. In Joule, you can add and delete any maturity. You can add and delete any line. It's very customizable. So on the left, column bid for buy orders. On the right, column ask for sell orders. A little bit of vocabulary. If you initiate an order at the bid, you propose to buy gas at a certain price. If you aggress an order at the bid, it means that there's an order that's already initiated and you agree with the price and the quantity, so you will sell the gas at the price proposed by the buyer and you will make a deal. Same goes for the sell side. You initiate an order at the ask, you propose to sell gas. And if you aggress, you buy gas to the seller. So to initiate an order is to enter an order. price and quantity in the order book, and to aggress is when you click on the price on the screen and you conclude the deal. Here you can see that there's an order on the order book, and the trader who initiated it proposes to sell 50 megawatts of TTF within the day at 20.275. So if I click on it, I will get the 50 megawatts of TTF and I will buy them. So as presented previously, that's within days, so I will be delivered for the delivery hours, the remaining delivery hours of the day. So it's 11 now in Paris, so it's 12 on your side. So it's for you, it will be from 3 p.m. to 6 a.m. of the next day delivery. So 50 megawatts each hour during this delivery period. I gathered some questions that you asked and that have not necessarily been answered by the previous slides. I will quickly go through them, and then I will let you the chance to ask any question you like. So, well, the current day will be the current gas day traded till its ends at 7 in the morning. So yes, it's equivalent. The 6 is equivalent to 7 for you. So yes. And what about a trade made at 6:59:59? So this trade, well, you get what you trade. So at 6:59:59, you it will already be the next trading day. The cut is at 2:59:59. So if you trade at 2:59:59, you will get the next day. If you trade at 3, you will get the day plus 2. That's how it will work. There's no limitation with the time of the spread. It's straight 3 a.m. How does it work for traders who are trading on more than one company profile? They just switch between the companies in the system when trading? Absolutely. There's currently a possibility in Triport to switch from one company or from one entity to another. It's something that has to be determined in advance, of course. If you are trading under 2 entities, you will have anyway to have 2 licenses. But once these licenses are set up, you can have this possibility in Triport. And this last question, I'm not sure about what it meant. So how does future expiry fee work? So if the one who asked this question is here, do not hesitate to raise your hand, and don't hesitate also to ask more questions.
Thank you, Xavier, for your excellent presentation. We see that there were questions from the audience, and just I will check it. For me, it was a question arising when you're showing this time schedule on the products with these hours 3:3 and 2:2.
Yes.
Was it related to the Baltic-Finnish time or Central Europe time?
Oh, sorry, I forgot to precise. Yeah. That's Paris time. So for you, okay, you just add an hour. Everything is aligned.
Yeah, perfect. That's what I just wanted to clarify. Okay. So by the way, for the audience, please have in mind that the product fact sheet will be shared with you in few days period, and this product fact sheet will be available at Get Baltic website. So maybe let's start with the questions. Previously, I think I saw one. Oh yeah, Marco was raising the hand. So he's having one question. If I buy 10 megawatt hours for spot weekend product, then how much I get for Saturday and how much for Sunday?
Saturday and Sunday are 24 delivery hours products. Was that the question?
But the question was if he's buying 10 megawatt hours for the weekend, so how it will be split it on for the Saturday and how for the Sunday.
10 megawatt hour for the weekend. If you trade the weekend products, you have a 48 hours delivery, so you just double it.
So does it mean that it will be 10 for Saturday and 10 for Sunday?
Exactly.
Okay. Any more questions? Let's see. Don't be so shy. Here is a good opportunity to ask the question. So let's wait. We still have several minutes. In any case, we planned that we'll be finished in half an hour. But if more questions arise, so here is a perfect time to get these answers. So let's wait a little bit. In any case, if currently no more questions arise, by the way, with this presentation and the recording will be shared as well, but not today. It will be when it will be, checked, and the producer will be happy to share with the audience. Let me see if I get one more question. How would the actual nomination at TCO platform happen with the within day nominations?
On the TSO platform.
Yep.
What can you be a little bit more specific?
Yeah, Yanis, if you could specify, so it would be really great.
Do you hear me?
Yes.
Okay, yeah, the question is, currently, let's say if we sell something at Get Baltic, we then nominate on the TSO platform that we deliver the gas at VTP to Get Baltic, for example. And now this within the trading, for example, Latvian, Estonian virtual trading point, they do not have hourly nominations. It's just how then we just simply then nominate we calculate the remaining hours and nominate that amount for the within day product, or how I guess that's the only option, right? Or how is the nomination? Is there any let's say counterparty matching at the TSO platform?
I'm not sure how it will work on the TSO side, but you will definitely have to nominate for the remaining delivery hours of the day as per the definition of the within day product. That will, yes.
Karolis, this is Yeva. Maybe I can share a bit, and hopefully this will answer Yanis' questions. So all the trades concluded on EX will be nominated by ECC, and transaction concluded on specific hour will be nominated next hour. So the same as it is right now on Get Baltic.
Okay, thank you.
Thank you, Yeva, for additional remarks. Okay, let's wait for more questions to arise. Okay, I see one more question, quite long one. Could you please explain once more what was the difference between the cases when you buy what you see? Example, if you buy 10, means that you actually buy 10 megawatt hours for the entire period. And in which cases buying 10 means that you buy 10 megawatts multiplied by number of remaining hours in within days.
Sure. So for all products, but within day, you get 24 or 48 hours or more if it's a 3 days weekend, but it's a special case. The difference lies between the products quoted in megawatts and the products quoted in megawatt hours per day. So as stated here, you can see that for GET products, your unit is megawatt hour per day. Most other products are quoted in megawatts, which actually would mean megawatt hour per hour. So if you trade 10 megs, let's take a simple case, a day ahead. You trade 10 megs of TTF within TTF day ahead. That will correspond to 240 megawatt hour delivered in total the next day. If you trade the same, if you trade 10 megawatt hour per day of, let's say, Lithuania, it will only be 10 megawatt hours delivered the next day. So if you want to match it, you will have to trade 240 megawatt hour per day of Lithuania. Now, on the within day, these 24 delivery hours do not necessarily stand. The delivery hours are the remaining hours of the day. So I will take again this example. You trade here, you have your 3 hours lead time, and it brings you to 7. So that will leave you 11 hours of the day for delivery. The difference between megawatts and megawatt hour per day product is if you trade 10 megs of TTF within day, let's say, you will have 10 megawatt hours delivered each hour. So between 7 and 8, between 8 and 9, each hour you have 10 megawatt hours delivered. So here, if you trade 10 megs, you have 11 delivery hours. It will be 110 megawatt hours in total. If you trade the same on-screen quantity of a GET product, so megawatt hour per day, you will only get 10 megawatt hours delivered for the remaining remaining hours of the day. And same, if you want to match the quantity, you have to apply here factor 11. So you have 110 megawatt hours per day, will be 110 megawatt hours delivered in total. So here on GET, you can just, to make it like very simple, on GET, you see on the screen the exact quantity that will be delivered. On the other products, you see on the screen a quantity that has to be multiplied by delivery hours to figure out the total volume that you will get delivered.
Yeah. So one more to confirm what Xavier mentioned, like for the Baltic-Finnish markets, all these megawatt hours will be on the same principle that we are having at right now for, let's say, megawatt hours per day. But for the rest of party products, which will be available like TTF, PG or THE, it is this quantity is shown in megawatts, and having in mind how many hours it is left till by the end of the day. So I hope it's clear.
And just for your information, there are a few other products which are also quoted in megawatt hours per day, and these are French PEG and Spain PSV. All other products are in megawatts.
Okay, so majority of for those market participants will be looking into Baltic-Finnish markets. Of course, there will be other trading companies who are also interested in others. So that's the main specifics on these hours on this. Let me see if we have additional questions. Seems no more questions. If still we have several minutes, so if you see additionally questions, so do not hesitate. Later, if you see questions arise, let's say not today, but in coming periods, so do not hesitate to contact GET Baltic team, and we'll be happy to answer you as well. I think I do not see any more questions, so I could say that our workshop is over. It was, I think, very valuable and informative for all of you. Thank you for our presenter, Xavier Denis. We really appreciate it for clarifying all the differences between these products, and also thank you for the audience on this very nice and huge participation. I mean, with the numbers of participants. So I hope that you will attend the next week workshop as well. So thank you one more time. It was a pleasure to be with you. Have a wonderful day and see you next week. Goodbye.
Goodbye.